Good morning, everyone, and welcome to the European crossover webinar. And let's move this out of the way. And we have seen the dollar going and ramp right on up. Seeing right here, coming right into this key area here. So on the 2-hour chart, we can see right into the 97.46, which is key level from before. Obviously, we've seen the euro going and take a pretty good dip. Let's go and take a look at the dollar here. Open the door for actually a move up to 97.73. Certainly the euro itself, even taking out the 1275, we're looking at it on the 2-hour, but we'll look at it here on the daily. And here's that 1275 right in here. We're just dipping just below that, but that 1275 will be key on a daily to go on and defend that on the daily. Gold is struggling here at support at the 50% of the move of 1167 to 1246. Oh, this whole entire move here. Here's the 50% right here at 650. So we're just trying to hang it on around here. We had already seen a pretty big move in gold, and I mentioned in the analysis, obviously exacerbated because of the big move, continued move we've seen where crude oil actually dipped in with a $50 handle on Friday. Certainly exacerbated the move in the yellow metal here. You've even seen the cable dip into, and I believe that's one of our supports here is going to be, it's 28.44. I think I'd mentioned right in here, you can see here on the analysis right there, there it is. Actually, look even a little bit lower here. Right here's 28.44, and we dip below, we're recovering just a little bit above that. And just above this key area here, which is 28.68, which is the initial area, and we dip down in here into the 20, just even all the way even below the 28.44 area here. Bonds continue to work up a little bit higher here. S&P just slightly under a little bit of pressure. And the dollar CAD, we did the analysis here. This reached a key area. I think it was like a temporary, what I called the zenith. And that's just right there. I don't know if we can go in, especially when you think where the dollar is right now, you think the dollar CAD would be up a little bit stronger, but we'll see how things play out here. Let's go on and move into the news. And this might have helped push this a little bit lower, which is the Italy budget tussle raises debt concerns. ECB's De Guindos says Italy's budget crisis is raising broader concerns about the sustainability of its public debt and risk spreading turbulence to others. The European Central Bank Vice President Luis De Guindos said on Monday, with Rome locked in a fight with the European Commission over its plans to raise spending, the ECB has made it clear that it will not step in to bring down Italy's borrowing costs as the rise in yields was a result of the government's breach of EU rules. In Europe, we observe re-emerging debt sustainability concerns, said De Guindos. As regard public finances, Italy is the most prominent case at the moment in light of the overall debt level and political tensions around the Italian government's budget plans. He added that the strong market reaction to Italy's spending plans also raised concerns about banks as they hold large amounts of Italian debt and falling bond prices weaken their balance sheet. Certainly this would have kicked off, obviously the euro's technically weak, but obviously you can see right here, this would kick off a fall, and we certainly have seen that. The European Commission gave Italy until Tuesday to present a fresh budget plan, but political noise out of Rome in recent days does not suggest it's willing to back down raising the risk of escalation and EU sanctions. The strong market reactions to political events have triggered renewed concerns about the sovereign bank nexus in parts of Europe, DeGuindo said. Although contagion has been limited so far, it remains a possibility. In addition to debt concerns, DeGuindo also singled out potential downturn in the United States as a risk factor, given that the current expansion is significantly longer than historical norms. He also pointed to risks from global tensions due to the strong dollar and trade frictions. This could trigger a domino effect, leading to a sharp sell-off and further price pressures in assets, with stretched valuations, with the potential spillover into Europe and financial markets, DeGuindo said. Well, with all due respect, I think you better worry about your own situation than not worry about anywhere else across the pond. Okay, moving on to the Eurozone. Growth slowdown is a return to normal. The Eurozone growth is merely returned to normal after an exceptional 2017, and the slowdown is primarily due to weaker external demand. European Central Bank DeGuindo said he had that the negative market spillovers from Italy's budget tussle were so far limited, and argued that the Rome's main problem was not high spending, but weak growth, which can only be addressed through longer-term structural reforms. And moving on to the Aussie, Australian, New Zealand dollars ease as global growth worries come back. The Australian New Zealand dollars eased again on Monday as concerns about global growth resurfaced, weighed on risk-sensitive assets, including equities. The currencies were also dragged down by a broadly stronger U.S. dollar after the Federal Reserve last week reaffirmed its plans to raise interest rates in December and beyond. The Australian dollar hit a one-week trough of 72.11, slipped from Friday's 72.77. It also went as high as 73.03 on Thursday, level not seen since late September, but failed to build on these gains. A run of disappointing data from China recently, including faller producer inflation and cooling domestic demand, have hurt risk sentiment. Asian shares started the week in negative territory after a sell-off in Wall Street on Friday. The market will now turn its attention to underlying fundamentals as well as the ongoing global political issues, said Nick Twidell. A heated Sino-U.S. trade war is at the center of investors' focus, with the leaders of the two countries set to meet later this month. Markets will also look at any headlines from the Asia-Pacific leaders meeting in Singapore this week, where President Trump has decided to skip. Closer to home, Australian traders will be focusing on key fundamentals of the wage price index and employment data for short-term directions in the currency, although either are not expecting to have much of an effect on the current RBA thinking. The RBA has kept rates at a record low, 1.5% for more than 2 years now, and has reiterated the need for policy to remain accommodative amid tepid inflation and spare labor capacity. Data due Wednesday is likely to show a welcome tick up in third quarter annual price index up to 2.3%. Separate data on Thursday will likely show an extended bumper run in employment that began last year. Other key analysts for investors this week will be the economic indicators from China, with data on industrial production and retail sales providing a fresh gauge of the health of the world's second biggest economy. China is the top trading partner for both Australia and New Zealand, so any slowdown there would be detrimental to their economies. Sterling falls to 1.5-week lows as Brexit concerns rise. Sterling fell more than 1% against the dollar on Monday as the greenback strengthened broadly and doubts grew over British Prime Minister Theresa May's ability to get the backing of the European Union and her own party for any Brexit deal. On Monday, the British currency plunged to a 1.5-week low of 28.41 as negative headlines over the last 48 hours punctured growing optimism last week that the deal was imminent. Headlines over the weekend suggest now that that's less likely, and in any case, the crucial task of getting it approved by Parliament looks challenging as ever. May has called off special cabinet meeting on Brexit due to the take place today. The Independent website reported, amid growing signs she would not get parliamentary backing for her proposed compromise with the EU. There's also reports that more ministers were set to quit following the resignation last week of Transport Minister Joe Johnson. May's former education minister said Parliament will vote down the Prime Minister's possible Brexit deal, so voters should be given a new referendum. Sterling's woes was compounded by a broad-based dollar rally, with the greenback strengthening 0.8% against the euro. The last drop in the value of sterling comes in the backdrop of rising short positions in the pound. Latest future data show net short positions registered the biggest weekly 1.5 month rise to 4.6 billion. However, a heavy sales state of economic data this week might offer some support to battered sterling bulls. Wages, inflation, and retail sales data are all due this week. And on to the dollar. It hits a 16-month high, and Brexit fears knock sterling and euro. The dollar rose to a 16-month high on Monday as investors positioned for a Federal Reserve interest rate rise next month, and concerns about political risk in Europe put pressure on the euro and the pound. The dollar has risen since the Fed kept interest rates steady last week and reaffirmed its monetary tightening stance. It remained underpinned by the robust U.S. economy. Fears about a no-deal Brexit and a growing rift in Europe over the Italy's budget help extend the dollar's gains on Monday. King Dollar has staged a return, said Valentin Mironov, head of G10 FX strategy at Credit Agricole. After the Fed, investors are pretty happy to reload on long dollar positions. The European currencies look most vulnerable. The euro was knocked back by reports the European Commission has rejected Italy's 2019 budget, saying it flouted a previous commitment to lower the country's deficit. The single currency slid 0.7 versus the dollar, so it's all on this Italy news. The European Union was given Rome until Tuesday to present a revised version of the budget. Also cuts its forecast for Italian growth last week. All this has been good news for dollar bulls, with the Sino-U.S. trade tensions and weak China data also feeding safe haven flows to the greenback. A strong U.S. economy versus a weakening Eurozone economy will trigger further euro selling, pressuring, while the dollar will be supported going into year-end, said Bert Berg of Global Macro. The British pound on Monday fell 1% and slipped to 28.41 as doubts grew over UK Prime Minister May's ability to get the backing of the EU and her own party for any Brexit deal. With less than 5 months before Britain is due to leave the EU in March, negotiations are still struck over how to prevent a return to a harder Brexit, British-ruled Northern Ireland and EU member Ireland. 4 British ministers also remain in the European Union are on the verge of quitting May's government over Brexit, the Sunday Times reported, adding to the political uncertainty. Against the yen, the dollar gained and was at last at 14.11.5, its weakest level since October 14th. The dollar has been preferred over the yen because of the diverging monetary policies of the Fed with the Bank of Japan, which is expected to retain its monetary ultra loose for some time. And it looks like the dollar went right to that resistance. We had that as our level here on the. If you looked at it, I posted in the room the Asian analysis, and we had 1422 there. And we'll go on. Gold dips fell to its lowest in 1 month as the dollar strengthened and expectations that the Federal Reserve is on track to tightening borrowing costs. The dollar is gaining strength after last week's Fed meeting and positive U.S. economic data, which is weighing on non-yielding assets like gold. The dollar index, which measures the greenback against a basket of major currencies, was up 0.5%. The greenback climbed to a more than 16-month peak earlier in the session, making bullion more expensive for holders of other currencies. The Fed has reaffirmed its plans to raise interest rates in December, following by 2 more potential rate hikes by mid-2019. The outlook for tighter credit was supported by an unexpectedly big rise in U.S. producer prices in October. Seems like the Bears are back in control. It's disappointing that every time gold starts to rally, it runs out of steam so fast, a Hong Kong trader said. Spot gold is expected to test support at 12.01 with a good chance of breaking below this level and falling more to 11.92. Hedge funds and money managers cut their net short positions in gold by 8,136 contracts to 37,486. Here we go, and get the analysis going and get the bias chart. Okay, after, last week's poor price action found the FOMC has left the euro under duress. After a 200 pip rally at the beginning of the month, the pair is seeing that move evaporate. A break of 13.11 on the 2-hour close points to a daily support of 12.75. Euro requires a 2-hour close, would have to be above 13.68 to put a pause on this downside pull. Well, certainly we've seen that here with the euro. It has even come down here to this 12.75, and we'll take a look at it here on the daily. You can see right here, key support here. And it'll be interesting. This whole area here, you know, the euro is vulnerable unless we were pointing here as we broke here. And like I said, I thought that the dollar would ultimately end up taking a pause, but the news, well, two things happened on the way to the pavilion, which is the FOMC, and it mentioned, I was looking over some stuff. A lot of people expect the FOMC or the to go on and make remarks about concerns with the pullback in equities. They did not, reaffirming their thoughts on tightening wasn't a surprise, but not even referencing as much also was a bit of a concern. And then, of course, obviously we were open up here, but then with the whole Italy news and not going away, that just made an excuse for us to just drop lower and go towards this 12.75. Just right here, there's a little bit of support here, which is going to be that 12.18. I don't know if we'd fall that far, but once again, we've already fallen quite a bit. And here's some more here at 12.35. Yeah, right there, 12.35. Right here. Guess we can go just about there, 12.33. Let's take a look at it here on the 2-hour close. So right now, I mean, we already come off quite a bit here with the euro. 12.75 is going to be important on the daily, and I guess we can split the dip right there. I mean, there's this whole area, but how far they can go and push it, well, we'd have to really open the door for potentially as low as 12.15. I don't know if we'll make it down that low, but let's take a look at it here on the 2-hour chart. Certainly nothing that's evoking any positivity, although we've got a little mini hammer. We've got just below that and came down here right into this 12.49 that took that out. If we were to test a little bit lower, it'd be 12.33. 12.33, so we'll put that as our intraday support, but we're certainly under a lot of pressure now. And the Italy news just doesn't want to go away. As far as resistance, well, that's going to be back up here at 13.11. That's pretty clear. So this one, like I said, we're under a lot of pressure, but that would be the resistance. On a short-term basis, we're looking at this 12.89 here. But if we get past that, this is the key level they'd have to regain is 13.11 for now. Somewhat straightforward here with the euro. Some of the other ones, we'll get to the other pairs. But right now, the euro, until they've given Italy until tomorrow. This whole thing that, all the rhetoric coming out, they're not going to go on and back down. And the ECB, which is a concern, that's where we got this downdraft. They said there's not going to be any relief for Italian debt, because they said the reason they're in this situation, and they did, De Guindos reference that, is a concern with Italian banks that hold a lot of the Italian debt. But they said they're not going to provide any relief. And certainly that provides a risk here, or possibly a risk of, at least if nothing less, a mild contagion risk here. But they said they're not going to provide any risk because it's a result of them not sticking to the budget. Henceforth, we see this big drop. We were already weaker to start with, and then you see this big drop of over 75 pips, if not even more so than that, probably almost 80 pips from this area right here, all on that Italian news. And it's just not going away, and they're sticking to their guns that they're not going to make any further moves. They've made, they've given a tepid response saying they'll look at it, they'll do this, they'll work, blah, blah, blah. But they're not going to go and do that. And I think the ECBs are or the European Commission. They've had their fill of the whole situation, so the pressure remains. Well, it was already weak to start with, technically speaking, but certainly this just goes and pushes it down even further. I know Morgan Stanley was looking for relief around 1270. Here's that, but I mentioned the 1275 on the daily. But right now, once things are looking bad, then they just stay bad. Let's go and move into the cable. Cable is paired back 250 pips just below 29.35, which is at 50% of 26.96 to 31.74. The market is susceptible to an upside bounce to 30.15, but to regain upside, the cable would need to clear 30.68 on a 2-hour close. Next level of support is 28.69. Well, we've certainly even gone past that with the concerns of May here and thought, okay, well, this was the next level of support. We were nowhere near that. In the Asian session, but look, here's that 28.69, and here's the next bastion right here, coming in right there, and they've already come down here and tagged that. They're trying to hold above this 28.69, but that's it right here, and certainly, golly, look at after this pullback and this fabulous run, only to turn around and give it all back here. We'll go and take a look on the fib. In the Asian session, we were actually just a little bit of, right in here, this area, the 29.35, certainly when news is bad, it just keeps on going and staying bad, and you get that downside move. We get past the 61%. This is already throwing this out the window now. If you get this close below 28.69, then this whole move is completely negated, and the real bigger support would be 128. But at this point, then it really has getting beyond this 50%, even the 61%. Really, he's now questions this whole move. And so just about the time everybody was all bearish and we got a big run, now it's turned around and flipped back the other way around here. And so on a short-term basis, certainly this negative run is going to go and continue to weigh. The support now comes in right here, which is where we made a run down to, which is going to be 28.35 with resistance here at 29.23. You can see here, it's going to be key for them to try and get past 29.23. But really, at this point now, any moves back, it's going to have to make it prove itself. So you got to think that any moves back towards right there, the 29.39, are going to be taken as an opportunity to, get back short the cable. And it would be for us to go on and try and reclaim or get this thing back to neutral. We'd have to close at this point now above 29.88 just to get back to neutral, where it would put a pause on this downside. For right now, like I said, certainly open down and move higher. They'll probably try and come in to fill the gap, which would be here at 29.59 right here. But and that probably will give them a target if they can quell this downside. Will be a target to make a move back up here towards 29.59 and fill that little gap. It says here the Aussie has broken a formidable downtrend line. The initial upside resistance is 73.20 with a target of 73.78. The pair is pulling back for additional buyers to step in at 72. 2 consecutive 2-hour closes below 71.67 would be required to invalidate the upside. So we'll go and take a look here with the Aussie. And And we've done just that, made that run back to 72. Certainly we were up in here in the Asian session. We've made this run, and they've actually almost made it just to that key level here at 71.86. That's almost worked like a pivot, but that's going to be the support there, or you want to think about it as your risk level here on any pullbacks here on the Aussie, 71.86. We got that mark, still remains here, 71.86. On the upside for the Aussie, it's going to be right there, 72.49. Upside resistance for now, 72.49. Now, I think, like I said, this is the eventual area they want to get to, and they can even go beyond there, up in here. But it's a long way before we get there. So once again, 72.49 on the upside. Key resistance would be that 72.67, but we're still actually right there, 72.76. So we're still a ways off from there. So let's go and move into the Kiwi. You can see key support on the daily is going to be right there, 67.16, 67.16. And the support comes here really as low as here, 66.90, 66.98, 66, and that's what resistance was before. So we'll go with 66.98. They're above that daily support here that we referenced, but this is going to be the support right there, 66.98. You can see how important that is, with resistance coming in right there, 67.58. Pretty fairly clear. Obviously, this is even a lot better shape than even the Aussie. So certainly any dips in the Kiwi are going to certainly be supported, and that would go in and come in right there at that 66.98 area here, or between there and 66.89. And let's go move into the dollar CAD. Okay, so the dollar CAD stretched its legs with the moving crude to a $50 handle on Friday. The market reached its possible zenith in the short term of 32.33. Initial support is 31.71, followed by 31.43. The next upside target would be 32.88. A break below 31 would be needed to question the upside viability. And you can see right here where they came in right into this 32.33. Pull this back right there. And despite the strength we're seeing in the dollar this morning, obviously that has a lot to do with the woes with Italy, the Italy budget concerns in the euro, which has pulled this euro down a good 80 pips from the Asian session area. It hasn't affected the dollar CAD. Okay, so I still like this 32.33, and actually might even have to put the resistance a little bit lower, actually, if we go with where the close is. That would be right there, 32.21, 32.21. We said our first area of support was 31.71. And see that followed by 31.43. You can see that coming in right there. See that? 31.71 is a bit close. I mean, but you'll see where they'll maybe some very almost scalping short covering where they might step in and try and defend it a little bit. But the real support is going to come in right there at 31.43. Let's move this a pip higher. Certainly the moves in the dollar CAD was certainly a direct result of what we've seen here in the crude oil market, as this market is completely from where we were up basically just almost close to 80 to now on Friday we had a $50 handle. And that's been quite the fall here in crude oil. Certainly that helped aid and abet the move here in the dollar CAD to these upper levels, and also the dollar strength, which part of that might have been, once again, the Fed reaffirming. But one of the things that was a bit of was a surprise to many, myself included, was not really any mention to the risk that we've seen in the big move we've seen in equities. And read some research over the weekend, same thing. They were thinking, boy, that was a bit of a surprise there that they didn't. But certainly this move in crude oil has helped stretch this move out. But there's pretty good resistance here, a decent amount here at this 33.22. And here's the next area to be, if we could launch, that's where they would go to. I don't know if they have that without taking a pause, but we'll see how this, the dollar CAD has swung from different areas and then pull back, but it's still maintaining. But this will be interesting whether it can actually get a 2-hour close above this level right here. Once again, you can see that right there. Moving on to the dollar Swiss, this has continued to stay strong here with near even a pullback. Only key thing is a little bit interesting is right there, there's par 08, and we're just barely just above that at par 09, just a hair above that. right there. I'm just going to go with 0120. 0120. This thing has been so strong. With support, we're going to go right there with par 60. Right there, par 60. Now moving on to the dollar yen. Okay, so the dollar yen has proved its resiliency after backing down from confluencing Fibonacci levels, then retaking the same ground. Initial resistance on the 2-hour comes in at 14.22, but the thirst may not quench without challenging the 14.55. So we did make it here to the 14.22 right there. And what I was referencing here is, here's that confluence of the two fibs. Remember, the 1385 is a 78% of this move of 1163 to 1455, and this 161% right here. And we saw a decent little pullback from here. Look at that. We made it up here when we got right here to 1382. And look at that. We even went sub 113. And then look how the market turned around and came right back up, as like Blake likes to say, like a beach ball underwater, and reclaimed, not only got past this, but reclaimed above this 1389. Well, that certainly opened the door for us to move higher, and that's where they went to, this 1422. We weren't there in the Asian session, but we certainly did make that move. I think we're up in here. We certainly made this room up in here to the 1422. The markets did a pair back, just a minor pullback. We are a little bit overstretched. Now, whether or not we can come up here, which is this is 1455, but certainly has one to be back down. But once again, they've really stretched this dollar quite a bit, and certainly what pushed that dollar up even more so from the Fed was obviously the Italian budget issue ongoing, and obviously the Brexit thing that adds a little bit extra juice. So we've had a pretty good run here, but this will be the resistance right now, this 1422 on the dollar yen. Support will come in right there, 1355 for support. And I'm going to remove these. I just want to leave these in place to emphasize how this market had not only paired back a decent amount, like I said, from here we paired back almost 100 pips, only to turn around and jump right back above it and close above it, really open the door, for this to move higher. We talked about this one to resolve itself up to this area, and I thought we'd get up to this area, but I thought we figured we'd just probably stall around here and hang around until they could push. And obviously the momentum's continue to move this higher. Obviously the woes with the euro, with Italy, have continued to weigh on this. And on the daily, 1419 was the key level, but it's 1422 that we had on the 2 hour, and that's where it went to. Keep an eye on this daily close. This will be interesting here. You see this? Let's see how they close them today. At least for now, a little bit of a formation of a gravestone doji. Let's move into the cash dollar index. And it says with the close above 96.74, the next target is not in focus is 97.73. Daily support comes in at 96.20. 2 hour support comes in at 96.56, where 2 consecutive closes below that level would be needed to raise the doubts of the post FOMC move. Well, we've certainly gone and made that move here. We've actually come up, we're just below this key 97.46. When we take a look at it on the daily, here's that 97.73 I was referencing here. And we've come pretty close to it. 97 right here, 97.59, 97.60. With 97.46. Market just paring back, but the resistance, and certainly we're pulling back a bit from this area here, but the resistance, if we reassert ourselves, we'd have to look on that daily. And we're referencing right here, which is 97.73. So although we are pulling back a little bit, that would have to be your resistance right there, 97.73. A lot of things going for the dollar right now, which I wouldn't have thought. But once again, not only you have so many people long the dollar, but the FOMC, which most people thought there'd be a reference to the equity volatility, there wasn't that. And obviously the Italian budget woes or budget concerns, which has knocked the euro down for an extra 80 pips to come into today. And it's not only that, but as I mentioned, is they're stating they're not gonna do anything to help the Italian debt because they said it's their own fault because they didn't meet their what are you going to call it, budget constraints or whatever. It's their own fault for doing that. And the other thing that's been as a concern is, and DeGuindos mentioned that, is a lot of the Italian banks have quite a bit of Italian debt. So if they're not going to help, and they're going to say, we're not going to help you because you put yourself in this situation yourself by not sticking to those rules, then it really opens the door for a little bit of a mini contagion, and the market's pricing in that. Hence, we see this drop in the euro. You can see that here, and that subsequently pushes the dollar index to these upper levels. So it just one thing feeds on itself and feeds on the other. So we see the resistance at 97.73. Where would support come in? That's going to be support right there. And really between this, actually as low as here. It's a ways to go, but there's some support initially at 97.13, but below that, 96.88. I call it 96.87. 96.87 is where they can come down here. 96.87. So if we get a pullback, we start to slide. It's actually, this will be a pause, but the real support would come in at 96.87. So if we start to see this market, and I probably won't see that today, but if we do see a pullback, you might see a little bit of a bounce from the 13 and then them reassault it, and maybe we hit some stops, and there's a little bit of a gap here, not much, but a little bit between the bodies. But this is where you'd find some support coming, 96.87. I think we have to go and put that just in case that does happen. Probably won't see that at all today, I don't think. But once again, in that situation where we go. Now, there's some European growth numbers that are going to be coming out. There's some European data that they think Germany's going to come in fairly weak, and that could end up actually keeping the dollar fairly strong here. A moment. German inflation, zoo tomorrow. Yeah, there you go. German GDP. They're expecting this to, we're going to start seeing some weaker numbers out of Germany. That may keep the euro under pressure, even if it does try to pop up a little bit. Certainly, they're expecting some positive data out of UK this week that will help, but obviously it's not certainly not helping at this moment. Let's go and move this out of the way. So this will be the key resistance right here with support. This is if we do get pushing down, may not see it for a couple of days, and that's where you'll see some decent buying here for the cash dollar index. Let's go and move into the gold market. Okay, gold has sustained a daily close below the breakout level of 1219, breaking the upside momentum. The move coincides with the post-FOMC move for the dollar. Crude going sub 60 exacerbated the descent. 1216 is the 23% of 07 to 46, but the market would need a 2-hour close above 1228 to negate the downside, because now that we broke that 1219, that really has broken the upside momentum. Daily support now comes in at 1206, confluent with 1206.50, which is the 50% of the move of 1167 to 1246. So we'll move into the gold right now. This would actually move a little bit lower as we've dipped almost to 4 and change. But you can see here, this is the 50% of this entire move. Right there. So we come in. That's why even though the, see right there, the 50%, even though, and the 61% comes in at that key level, that 97, but even though the dollar has continued to move higher this morning, obviously the woes with Europe, with Italy has, as I mentioned, caused the euro to slide another 80 pips. We haven't seen the reaction here in gold. You're thinking, well, God, why isn't gold a lot lower? Well, we've already seen this move matriculate from Friday. As we broke past the 1219, that's basically all she wrote, because that was the breakout area. Remember how much trouble they had? Remember the move to 12.19, this sharp pullback. And this is, a couple months back or month and a half ago. And then finally, once we get past 12.19, it was blue skies ahead. And then we took a dip. We got back above it. Going back a second time really opened the door. And obviously, the moving in crude oil, as mentioned on Friday with a $50 handle, that was huge. That really exacerbated the downside move in gold. Hence where we are now. Well, the 50% is the key support right now. We've been as low as 4. We'll look as far as for support right now on a very short-term basis would be 1202. 1202 right there. Not saying we'll make it down there and everybody see the dollar's paring back a little bit, but where would support come in? It'd be 1202, and then obviously this huge level 97. But for right now, the risk level would be 1202. And on the upside, for right now, on a short-term basis, there it is, 1211. And having lost this momentum, this breakout area 1219, this now flips it back to bearish. Flips it, at least at this point, maybe we could argue the point that it was kind of like a range. But once you lost this 1219, which was the breakout area, you know how important that was. Look how long we spent in this range here, dating back into August, all the way until it finally broke out here. To lose this, and generally what will happen, sometimes you'll go 50% back into the range. So let's take a look at this. 50% of that range takes us at 0860. And if you look on here, they tried to hold that area and they slip back, but 50 is the overall 50%. So right now it's trying to hold a little bit of downside pull, but it's overall still holding if you consider how far the dollar index has moved up. You think if you thought that the euro would lose 80 pips already, and dollar and gold had only lost about an extra $3 or $4, you'd be surprised considering how big this move has been, but that's part of the reason there. So we got 1202, and we'll move into the 30-year bonds. Trying to work a little bit higher here in the bonds. Resistance is coming right there. Now with that, we can push a little bit higher, but for right now, resistance on a short-term basis come in right there at 38.16. We'll see if there's a fib to go along with that. Not in the 38.10, we're at the 50% right now, but resistance will be 38.16. Still remains bearish. And support. 37.20. 37.20. And let's move into the bund. Resistance here is going to be coming at 60.55. That's 65.55. And don't get in the way of this thing with that Italian budget news. Support would come in right there, 60.06, 60.06. We do have a level here, but I'd go to 60.06 in case something comes out of Italy, but let's go 60.06. And let's go and move on to the DAX. It's going to be right there, 11.348, 11.348. Not much lower than where our support was. Resistance right there, 11.536 for resistance, 11.536. Okay, and that actually, oh wow, time really got by real quick. We're actually already at the time to close it down, let Dale come in. And thanks for joining us here on the European Crossover webinar. Good luck trading.